Eric Mwad, weekend analysis for the weekend of January 17th and January 18th, 2015. Let's take a look at the close in the US on Friday. We begin by taking a look at the Dow, which was up 1%, and Nasdaq was up 1.39. S&P 500 was up 1.3. Gold was up almost 1%. Crude oil was up 5.2, and we see that the VIX was down 6.5%. For the week, the S&P 500 was down 1.24%. For the week, the Dow was down 1.27%. And for the week, the Nasdaq was down 1.48%. Let's take a look at the charts. We begin by taking a look at the Nasdaq weekly, which at the end of the week, after what was seemingly like a huge week, seems to have held this support level, which goes back to the previous weekly closing high. So the market has been defending that. The last couple of times it's been to that same area. You can see this week it held a week ago, and also this past week it held that level. So that breakout from a couple of months ago seems to be still in play, with the market defending that level. During the week, we had also seen the Nasdaq's weekly RSI drop below 50, but by the conclusion of the week, with that nice move on Friday, the market did hold above that 50 zone. Ultimately, if the market does move a little bit lower, you can see that there could be some line of defense around the 50 level on the weekly RSI. So there's a lot of support, from the weekly RSI and also from the previous breakout at about 4582.90. Now, if we take a look at the Nasdaq daily, we'll see that this is where I suspect the market could be doing its best to hold the market together, with this line on the daily RSI. This is where the market has been bouncing, and those of you who've been following me for a while know that this is where the market has been giving traders reason or an opportunity to go long for a swing trade. Every time the market has come back to this zone, market has moved higher, double bottom there, uniform activity below that line and back above it. There was an entrance to the upside there. Uniform activity below the line, back above it. There was support there, also support on the line there, which is this lows. And over the last 3 days or so, the market held there with a nice move on Friday. So it seems like this is a line of support based on that line on the daily RSI for the Nasdaq, and this is true for most of the daily charts for the major averages. Also, we can see this on the daily, that this band of support continues to be in play. So the market's been coming back here last couple of weeks, finding support there on a day-to-day basis, week-to-week basis, and moving higher. So as long as this is holding, then we can see that the market is indeed still looking strong. We can also see that if we draw a line connecting the lows on the Nasdaq like that, that it comes in contact with the lows of Thursday and Friday's action. So that holds, and as long as the market is holding above that this line, so those two lines, and the second line being this line, then the market should be poised to go higher. Otherwise, of course, if we happen to break below that line, if we break below those two lines, then maybe we are due for a pullback. But as long as the market is holding above that line, like it is doing right now with the Friday's move, then it looks like the market generally is pointing to a swing trade to the upside. If we take a look at the hourly chart for the Nasdaq, we can see a simple straight line connecting the previous highs going back to early September on the hourly. Just draw a simple straight line. You see that support has been recorded by the market here. It held here, and it held here this past week. So that's good. As long as the market is holding above that line, it means that there's support coming in the market every time there's a shallow pullback. And also the previous breakout on the hourly So this entrance there for this move somewhere here, and we've been talking about the extension of that line and that the market has been using that for support. Recently, over the last 3 days or so, it came here and held above that line, which might explain Friday's explosion to the upside. We also see that the close on Friday in the last hour was strong because the hourly for the markets moved above 50. So as the hourly moved above 50, we see that strong move in the general market on the hourly chart, closing strong into the end of the week. Now let's take a look at the Dow from a weekly standpoint. So the Dow Jones, we can see like the Nasdaq, it held the previous breakout level, which was at 17,279, and a simple line from there shows that this is where the market has been finding support week to week. We also came close during the week to the 33-week moving average. We touched it and bounced to the upside. There's also another reason for bulls to believe this market moves higher, because if we draw the line connecting the RSI lows like that, and we can draw it through these lows because of that uniform action, we can see that the RSI has now come back to a level where it has been bouncing over the last 2-3 years. So if the market can bounce on that line in the new week, then that's a reason for bulls to believe that the market eventually goes to test the most recent highs at 18,000. So above that line on the weekly RSI, the market is bullish. Below that line, maybe we might be looking at a market that could pull back. Now, let me show you one simple thing that we should always consider in the current market is what the market does around the 50 level on the weekly RSI. The market's been bouncing on the 50 level of the weekly RSI since 2013, as you can see on a weekly chart with nice lows recorded every time. All these are nice entries to the upside. Uniform activity below 50, back above 50, nice entrance around there. And so if the market comes around that level down the road and bounces on that level, that's where we should generally consider looking for long opportunities. If we take a look at the Dow daily, again, we see that the previous daily closing high was a buy breakout signal there. And since then, that line has been used by the market for support. It was support during this move here to the 50-day moving average, support here about 2 weeks ago or so, and support here over the last 2-3 days. So that looks very constructive. We can see that on the daily for the Dow, this line of support is where it's been bouncing over the last 1 year, 2 years. And we can also see another line connecting the lows if you draw it like that. And the market is bouncing on those two lines. So we can easily see that above those two lines, the market should look to move higher. Otherwise, if we break below those two lines, maybe there's a reason for a pullback. And just to show you here that every time the market has moved above the green line, it's been good for a swing trade to the upside. And so that's why we are using this line, even this instant here. Every time it gave you a swing trade opportunity to the upside. And recently with uniform activity here, which was somewhere there, and uniform activity below that green zone and back above it, which was a nice entrance there. So that's what the market has been using for support. And so above those two lines, it's bullish. If it breaks below those two lines, maybe we are due for a pullback. So without any further information, we can see that we are holding the previous breakout and the RSI lines are holding. The interpretation here is that this is a market that could easily go higher. If we take a look at the Dow hourly, we see that this green line is where it's been holding support on the hourly chart. And just to show you that quickly, you can see that every time it comes to this zone for an hourly move, it bounces to the upside. Eventually recaptured it here. It was good for a move that began there. Did the same thing here. Good for a move there. Same thing here. Good for a move higher. Did the same thing here a couple of weeks ago, which was this entrance for the 2 days. Remember, if you recall those 300 plus point gains on the Dow, it was after it held support here. It's come back over the last 3 days and held that level. So those of us who are watching that knew that the market was potentially looking to move higher. Also keep in mind that the Dow did close slightly below 50. So anything that pushes the hourly RSI above 50 suggests a big up move when that takes place on an hourly chart. And just a quick note on this 30-minute chart for the Dow. So 30-minute chart for the Dow, you can see in the last 30 minutes of Friday's action, the market had a spike because the RSI moved above 50. So that move above 50 on that smaller time frame can be the reason why the market had that spike late on Friday session. If we take a look at the Dow Transports daily or weekly chart, so the Dow Transports weekly, what I want to show you here is that since 2013, late 2012 actually, ever since it moved above the 50 level, which was here, and since then you can see an explosion, a massive move to the upside there. Since then, the market has been using the 50 zone on the weekly RSI for support. It did once so here, middle of 2013, so those lows. It came back recently, late last year, and held that, which was during this pullback. And so we can see that if it finally bounces around that 50 level on the weekly RSI, we should expect the Dow Transports also to be poised to move higher. Take a look at the Dow Transports, and by now this is becoming monotonous. It held the prior breakout. It's been holding firm on the daily. Every time the market comes here, it holds. So that support is well tested, and this is going to be on multiple occasions. So the market looks good based on that chart. Also, without too much repetition, you can see that this is where the daily RSI has been bouncing. Recently bounced on this line for a nice move higher, had bounced on that line there for a nice move higher, and on and on. So this is not something new. It's what the market's been doing over the last 2-3 years, and very nice place to go long. And we can see as of right now, depending on how things go in the next couple of days, this looks like to be a double bottom on the line. And if it holds and moves higher, it means that this was a double significant area to go long. We can also see that we can draw a line connecting those lows, this low and these two lows. We see a double bottom support. So everything is pointing to a market that wants to bounce as long as the market is trading above those two zones. Now, of course, we turn bearish if and when, for example, the market breaks below support on the daily. That would be a bearish signal. And if and when the market breaks below those two lines, that would be a bearish development. As of Friday's action, everything is pointing to a market that wants to move higher. If we take a look at the S&P 500, just one thing I haven't touched on in this video is we need to remember that the last time the market made a high, it made a higher high, but the technicals were on the lower lows formation. So as of right now, this is very bearish. So maybe what's going on here is we have a day-to-day move higher in the market, which would make sense. Maybe even a week-to-week move in the high in the market, but I'm not sure that the month-to-month action is to the upside. Maybe the month-to-month continues looking lower because of this serious breach, because the market's made a higher high and the RSI at this point had failed to move above 61.8. So I'm not convinced that the market eventually has to go back to new highs yet, even though everything points to an up market. I'm not sure because of the way we formed this last recent highs. They seem too bearish, and so that's something to keep in mind. We might get slight moves to the upside, but if we start breaking down, the reason could be that we've already seen a major high in the market. Just to remind you that the S&P 500 also has been bouncing at the 50 level on the weekly RSI. So keep that in mind. We've come close enough. In fact, during the week, we were trading below 50. And this is where the market has been holding strong. So if it bounces from this level around the 50, then maybe there's a reason for the market to move higher. For now, we have those long-term bearish signal and short-term bullish signal, which both of them are trying to see which one is more powerful than the other. S&P 500 daily, just like the other markets, I won't spend too much time on this one because it's pretty much the same analysis. We find support from the prior breakout there, so that makes sense. We also see that the RSI is holding steady where it should, and also connecting the line, connecting the lows. So the daily continues looking good on the S&P 500. On the hourly for the SPX, we can see we had a strong close the last hour on Friday because the market punched above 50 on the S&P 500 on the hourly. We can also see that the line of support where the market has been holding steady and finding support on the RSI was held, with the market coming back to this zone and holding. So that makes a lot of sense that we had that snapback move on Friday. Let's switch gears and take a look at the Canadian market, and we can see that it continues trading underneath the 10-week moving average. So it's still trading underneath the 10-week moving average. The 10-week moving average is about to make a fresh low. So as the fresh lows are made on that 10-week moving average, suggestion there is that we might go on to make fresh lows. So the moving average making a fresh low means that the price could eventually make a fresh low. We also see that we have already seen the bearish crossover between the 13-week moving average and the 34-week moving average. So that bearish crossover between those moving averages is not a good sign. So that's bearish longer term. And also we can see that the last time we had a bullish crossover, we had this market have a fantastic move to the upside. So that's one thing to see here. It looks like net is slightly bearish. And also if it's going to do well, it has to move above this line connecting the most recent highs. So the Canadian market trading underneath this line means that it is still not going to be strong. It needs to be above this line if it's going to move higher. We take a look at the daily. And on the daily for the Canadian market, we still continue trading underneath the 50-day moving average. So really also we had a crossover between the 50 and the 200-day moving average here, which could suggest that probably over time that this is a market that could see lower prices in the coming weeks and coming months. On the RSI front, I think there's a level of some type of a wedge forming if you take the highs on the daily RSI. One thing to note, this market won't be taking off unless and until it breaks above that high. So that could be an area of resistance. So we seem to be stuck in a wedge between the highs of the RSI on the daily and the lows. So until we get a conclusory move either above this wedge or below this wedge, I think this market is probably poised to be on a sideways action for now. If we take a look at the hourly for the Canadian market, we go back to the most recent break on the hourly, which is somewhere here. Now that break did move the market off this hourly highs, and so draw a simple straight line from there. We can see that this is where the market did recently break below that level on the hourly, and that was during this move lower. And so what the market has done over the last couple of days is come back to that level. So it would make sense if we see resistance here on an hour-to-hour basis that pushes it lower at the beginning of the new week. Now if we take a look and come back to the US market, we're taking a look at the VIX daily. Now this was the strongest signal during the week that the market was due for a pullback. And if you take a look at Thursday's market analysis after the close that I sent subscribers, I discussed the possibility of the market having a short-term move higher. Why? Because we can see that the VIX had come back to a level of resistance where it's been finding it difficult for the RSI to hold above this level. And we discussed this during the week that once the VIX came back to the same zone, it looked like the market had a chance of moving higher, as the VIX was going to stall with this double top. So this was easy to tell coming into Friday's action that this would probably be a reason for the market to move higher. And the reason for that was not because of that daily chart by itself, that we had seen that after the close on Thursday, that the hourly chart for the VIX was showing a level of resistance, as it had been showing resistance on this same zone on the hourly chart for the VIX. So as it came here on Thursday and held resistance, the suspicion was that the VIX would pull back and the general market would head higher, which is exactly what happened on Friday. So I still think that the VIX continues telling traders that the market is due to continue moving higher short term because of that resistance that we've seen on the VIX. So this was a good tell that the market should have been played to the upside on Friday. Now let's take a look at Apple in conclusion here on the free part of this video, and we can see on the daily it has come back to the line of support on the daily RSI. So the daily RSI is showing a line of support where it's been holding steady, going back to the lows of July 2013. Draw a simple straight line on the daily RSI. You can see that if it holds this level, then it should be due for a bounce higher. And there's also another line which connects it from the previous move higher. So if we come back and find these lows, figure out where this move began on the daily, was somewhere here. And so draw a simple straight line. You can see that those two lines intersect with exactly where the stock closed on Friday. So if it can bounce from this level, then this is where you want to buy Apple for a swing trade to the upside. This can also be seen if you take a look at the weekly chart. And on this weekly chart for Apple, it's a multi-year weekly chart. You see that since, let's say, about middle of 2013, the stock has been bouncing at the 50 level of the weekly RSI. This is where it's been finding support. And so it's come back to that general area around 50. If it bounces off this general area, also keeping in mind that the daily looks like it's showing a bounce, then this is where you want to go long Apple for a swing trade to the upside. Otherwise, this concludes the free part of this video. For subscribers, I'm gonna have part 2 ready sometime between now and on Monday, since that it's a holiday. So expect part 2 to be sent to your email. For the rest of you guys who are not subscribers, I'm gonna add on to the tail end of this video my analysis on Thursday, so you can see what the charts look like on Thursday before Friday's volatile move and before Friday's up close. Otherwise, have a great weekend. Eric Mwathe, good luck, peace and blessings. For rest of you guys who are not subscribers, I'm gonna attach my Thursday's analysis after this. Have a great weekend. Eric Mwathe after the close, January 15th, 2015. And to be fair to everybody, this is not an easy market at the present time. So I know it's a little bit too much volatility the last couple of days, and it's not easy, to be honest. It's not easy for anybody. So if you feel a little bit frustrated, I think it just makes sense and is a reflection of what's going on in the general market. So let's take a look at how the market ended the day on a very volatile session. Nasdaq did end up down the most, down 1.48%. So now the question becomes, what's going to happen on these daily charts? You can see on the Nasdaq, we are back where it's been finding support, as we discussed yesterday after the close. And also support could come from this bottom line here, connecting the lows over the last couple of days. And so something's going to have to happen here. Either we're going to get a good move and a bounce back off those two lines, or maybe for the first time now we start playing with the markets breaking short-term lows, like trading below those two, could be suggesting that this is a different environment. And it's a tough one to call. Also go back to the prior breakout level. So this line here has been defense. You can see the market's been holding firm here over the last couple 2 months or so. If it can hold there, maybe it's good. Otherwise, this could develop into a further move lower. Let's take a look at the daily for the Dow. And we can see for the Dow daily here, one thing that we should pay attention to is what the market could do over the next couple of days around this level, which has been very good in keeping the market together. And I know you've seen this so many times, but just for the sake of those who are new here, I like to always show you where the market has been bouncing. And if you put your opinions aside, this could have been a nice place to go long. And uniform activity there back above that line gave you a nice entry point there. Uniform activity recently back above the line, which is somewhere here. We bounced on the line during this short pullback, and we had 2 days back to back of 300 plus points on the Dow, and now we are back in the general area. So the question becomes, what happens here? Of course, if the market can bounce on that line and trend higher, then this is where we get a snapback rally. And of course, keep in mind that we are testing the prior daily closing high there. So that daily closing high previously there, once the market moved above that, we can see the market has been coming back to that general line of support. And that could be what is being tested, is the prior breakout level. Okay, so that's the bullish side. Of course, if you're looking for reasons why the market is going to go down, I keep coming back to these higher highs on the Dow with lower lows on the technicals on the Dow, and also the line that was previously resistance, as this was where the market had made highs. This line had been stalling the market previously on the RSI. We broke above it. There, we had a nice move. After that break, market would go on to trade higher, which is good. But now if we extend the same line of resistance, we can see, just like had been previously the case, again we came back here and are showing resistance. So that bearish development on the RSI, markets making new highs, RSI not following through, and then couple this with the fact that on the weekly we did have this bearish move, higher highs in price, lower lows in technicals. Again, in both instances, on the daily and on the weekly, the RSI failed to move above 61.8. It failed to do so on the weekly RSI and the daily RSI, and this could be a problem. In fact, it reminds me of let me go back to 2007. And so we go back 2007. Give me a second here. Let me get this straight. Let's go back. Let's go back. Just want to show you what it looks like. Not too much data there. Give me a second. Let me get this straight. And so we have in front of us the Dow between 2006 2007. Just want to show you what happened at the highs in late 2007. Higher highs in price, lower lows in technicals, and failure to hold above 61.8 or thereabouts. The prior line of resistance also came into play here. So that's a problem here in this market with this negative divergence. The key here is this negative divergence could eventually be a problem like it did in 2007. Let's take a look at the SPX back in the day, 2007 also, see what the charts look like. And here's a perfect example of making higher highs in price, lower lows in technicals, and also coming back to a prior line of resistance, to a simple straight horizontal line. Bam! So the 2008 charts tell us that the market's failing to make new highs with the RSI failing to move above 61.8. As you can see here in 2007 for the S&P 500, this could be a problem, just like it did in 2007. And eventually it did trade sideways here for a while, couple weeks, couple months, but finally the trend was lower. So that's the situation there. Just want to take a quick look at the daily at the time. So bear with me. Just want to see, for the sake, what the dailies look like back in 2007. And we see that at the highs, so at this high, it wasn't that bad, I would say. Okay, so we made a slight higher high in price. So let me get that. Let's get that. All right, I did not mean to talk about this, but oh well, it's good stuff. And higher highs, you can say the market made a lower low if you want to argue like that, but I don't think it was a very bad break in my opinion, but what stalled the market at the time was this line there. We had seen a short-term high, which was this high, and then the market came back and tried to take that line, and move above that line, and failed. We have uniform activity above the line back below it, which was the highs in 2007. So my thinking is this current market right now reminds me of that time period. If we go back to the current chart here for the S&P 500, so current S&P 500 weekly chart, we can see a couple of things: higher highs in price over a period of weeks, lower lows in technicals over a period of weeks, and this most recent high came with the RSI stalling to hold above 61.8. So the backdrop, if you are bearish, is that the market has seen a major sell signal, and maybe over weeks, over months, we might trend lower. But boy, if you take a look at this market from a short-term view, go to the S&P 500 daily. Now now come back to the bullish argument, and this is where you'd expect the market to find support. It's been bouncing on this line for the entire 2014 year, and so we are back in that general support zone on the daily RSI. If you had used this without too much confusion, too much complication, this was a nice place to stay long the market or go back in the market after a pullback. And we see that we've come back here on multiple occasions, uniform activity giving us nice lows, and even here. And so even though the market is closed down on Thursday, it's back to that general line. And so those of you looking for reasons to be long the market or to find an excuse to go back in the market, if this can bounce to the upside, and if this RSI can also hold above that line and bounce to the upside, that is where you want to go long. You go long and ask questions later. I want to conclude this by taking a look at the VIX, which tells me personally that as of right now, without more information, that the VIX is stalling. We come back to the VIX daily. I discussed this yesterday and over the last couple of weeks. This is where it's been stalling, and the RSI has come back to that level of resistance. If it can stay above that, then that's bullish. So here the key is, if it can stay above that line, it's bullish. Otherwise, if it rolls over and shows resistance on the line, something like that, then it's going to suggest a pullback in the VIX, and that the general market, the Dow, S&P, and all that, move higher. So let's watch that for direction. I want to conclude by taking a look at the hourly for the VIX, because it's giving us a sell signal for the VIX, buy signal for the general market, because you see it's coming back to this red line that I'm now drawing over with blue and showing resistance. This is where the market has been stalling on the VIX and where the general market has been trading higher. So the thinking here is that the VIX is telling us that it stalls and the general market comes back to life. So it's confusing, I do admit. We got lots of confusing signals. You have reasons why you can play the short side, and you have reasons why you can play the long side, but from only the short-term period of the dailies and the hourly. So if I was to conclude, it means that day to day we might move higher, but probably week to week is suspect. Month to month we might be trading lower. Eric Moore, the good luck, peace and blessings. I am out.